Oh, hello. How's everyone doing today? So I decided, what the hell? Let's go ahead and do a Clover Health video to get us ready for the earnings on Monday. So Monday is a big day for Clover. I don't know this, but a lot of people, for some reason, don't have Clover on their radar. And a lot of people on the YouTube platform, no one's talking about it. Not a lot of people. And I think that this is going to be a banger of a stock. There's a lot to talk about. And this video is going to have so many different types of calculations, different types of, just we're going to go deep today. We're going to go deep. All right. So if the title, so the title of this is very funny, but we're going to be talking about the SaaS, okay, of Clover. Now, what is a SaaS company? Well, a SaaS company it's a software company that's able to license its software to its user. Now, the reason why we're so excited about this type of business model is that you can license your software to so many people and not have a lot of overhead to be there. All you got to do is just have the data centers to be able to handle all of the inquiries that are needed within the usage of a SaaS. Now, if someone, people are like, well, what is a SaaS rumor coming on? Well, first off, Chamath, who is one of the besties in the All In podcast, tapped in David Sachs, who's really great with SaaSes. And he said that one of his companies that he owns tapped into this SaaS on accident. And there's a high probability, I think, that it could be Clover. Now, in terms of how short term this is, there's a high chance that it probably might not be them. But if it is, they would be one of them. Now, what am I saying? Well, if you go here into the specific section, and this is from the investor relation, the Clover investment case, you go in and you read multiple potential opportunities to enhance our virtuous growth cycle, right? Direct contracting launched earlier this year, right? Which then brought me online of Clover because I was like, whoa, this is really smart. No one was getting into this, allowing us to significantly grow our lives under management, Clover Assistant Management, and scale our product engagement into original Medicare. Here, check this out. Clover Assistant also has an opportunity to increase lives under management via long-term SaaS opportunities with third-party risk-bearing entities. Now, we spoke about this in our private Discord group. We had a great chat a couple of weeks ago regarding a other company that is working with Clover that ended up going private, in which they're using the Clover Assistant platform. Now, who knows? That could be them. So regardless of the matter, if, for example, let's say on Monday, Clover wasn't them, they did not book the SaaS, understand that a SaaS is in the future for Clover Health. They are a technology company and they will be booking this. And once this happens, the whole evaluation for Clover changes. It's a new form of revenue. It changes the whole intrinsic value calculation. And it's almost like a Super Saiyan going over 9,000. It just switches it to a point where now the stock is going to be trading at revenue multiples that you have not seen before, partially. And what I mean by that is if you look up the price to sales ratio for Clover, you can see that during the stock jumping to $28, they were trading at 12 times the revenue multiple. And again, this was back here. They didn't have a lot of money. In fact, direct contracting lives wasn't introduced back then. It was introduced more here. And then all of a sudden, you just saw an attack on the stock. And then all of a sudden, the CPI data came, and there was a devastation blow with the share dilution. And now we're trading below a revenue multiple of 1. Okay? So understand that Clover Health is, in my opinion, one of the most undervalued stocks in the market. And I just spoke to a CFA not too long ago, and he was like, well, if that's the case, if Clover is a SaaS business then that changes everything. And in this video, we're going to be calculating the intrinsic value calculation of the Clover Health stock, assuming that it will be a SaaS company, right? So I'm going to do a conservative one, then a non-conservative one, and we're going to do a support and resistance, and we're going to show you how to get ready for Monday. Okay, so if you can, please share this video at StockTwits. I don't really have an account there. I'm dying to make one, but help expose people to this channel. Please consider liking, subscribing, and hitting that notification bell. Liking really helps with this YouTube algorithm. So please do that so we can go ahead and extend this. Now, this is our intrinsic value calculation, as well as we're going to be using our Brain Machine, which is our proprietary software that we've injected within our Discord. Just to FYI, I haven't spoken to you guys in a while. Al Stock Alerts, we now offer a 3-day free trial, and we've been featured on Bloomberg, MarketWatch, NASDAQ, the NASDAQ, right? Benzinga, Yahoo Finance, and Yahoo Money, and a whole slew of reputable journals regarding how effective our platform is in democratizing financial information. Here's what's inside. Consider signing up at allstocktrades.com with a 3-day free trial. Cancel anytime. Okay, so what we're going to be doing here is we're going to be looking at the total revenues for Clover, okay? And here are the total revenues from 2018 to 2021. Now, again, this is wrong. They need to update this, because if you look at it, their actual total revenue for 2021 was actually 1.4 billion. So they're off by 100 million. So we're going to be using this number, okay? And this company has grown 160% year over year from the fourth quarter of 2021, 3 months ago when they reported. So what we're going to be doing is we're going to be looking at the effective short-term vision of Clover at 2022, where they're expected to exceed $3 billion. So it's going to be more than $3 billion, but we're going to have them for $3 billion. And we're going to be doing a conservative analysis. Now, normally I would do 7%, because I know I'm gearing it more towards the SaaS, even though SaaSes are 15 to 20%. And so we're going to be doing 5% for a very conservative analysis. Actually, you know what? Because of how sexy these ones are, we're going to do 7%. And then we're going to be doing a SaaS-like increase of 15 to 20%. We'll do 15, okay? So very quickly, and before I lose you guys here, I don't want to lose you, the medical loss ratio for a bunch of other health insurance companies, they have been doing, their losses have decreased because the coronavirus pandemic has been waning. Now, this is all great news, and I can't wait to take a look at their MCR to see how effective it is in essentially decreasing. And that right there is directly involved with how we evaluate Clover and when it will exceed to its intrinsic value. Another thing that's important is that healthcare stocks and insurance companies tend to do well during recession times. So this is a safe stock here. And once they become profitable, which they project to be in 2023, this is going to be a winner. Okay, so we're going to go ahead and, as promised, we'll do the calculation, and we're going to do it for first 2022. And then we're going to look here, and they're expecting Clover to grow at these measly 28% growth rate. I don't think Clover is going to grow like that. That to me is I just can't see it when a company is growing 160%. So if you look at the low estimates, which we can use for 2023, they're going to be making around $3.8 billion in 2023. So let's call that $4 billion. Then you have 2024. Imagine what they're going to make in 2024, right? Maybe $5 billion, $5.5 billion. And then imagine 2025, how much they're going to make. So if they consistently grow approximately 55%, they could be making $11 billion by 2025. Now, we're not going to say that. We're just going to assume 2025, they're just going to make $5 billion. We're going to undervalue this calculation, And just to make, just to drive the point of how undervalued the stock really is. You can see a whole bunch of people. I mean, oh my God, has the stock been attacked by these analysts? Don't even get me started. So let's go ahead and do what we came here. All right. So, and we're going to make this very organized. So 2018, 2019, 2020, 2021, 2022. So we're going to do, as promised, 0.07, 0.07, 7%, right? So in 2018, they made $276.9 million. I'm just going to be quiet for a second, just type it in. I'm typing in the wrong numbers. That's good. I was quiet. We also said 2021 they messed up, so it's 1472, and we expect them to make $3 billion. Okay. So now what we're going to be doing, and I don't know if you can see this, so I'm gonna zoom in here so you guys can stop squinting here. So we're going to go equals multiply 7%, and we're going to drag this out, and there's your calculation, and then we're going to put this here for the free cash flow. Doesn't matter what year you place it in; it'll just take the average. Okay, so there it is. So now we're going to put 2018. They had 281, 2022, 3 billion. That's what they were expecting. That's 81% growth. Now divided by the number of outstanding shares, which we can get by going to summary. Outstanding 470.85. Okay. So by doing this, we would get 170 for the bear, 248 for the base, and 384 for the bull. Now, hold up for a sec. What we can do here, though, is we take 2022 minus 2018. We can put 4 here. Oh, I see. So if we put 4, a conservative price projection for this would be $10 to $19. Okay. Now, this is what analysts are going to try upgrading to, right? They're going to say, this price, we'll bump it up between, Canaccord or whatever they're doing, $6 upgraded to 10, right? But again, this company ain't going to go bankrupt. They're going to be profitable. So we can push this out to 10 years and discount back into today's present value. And what we'd be getting is anywhere between 170 to 384. But let's be a little bit conservative here. So let's push this out to 2025. Let's make them make $5 billion. Now, as I told you, in 2023, the most bearish of analysts, whom you don't know are paid off by other insurance companies, are projecting it to go anywhere between a low estimate of 3.84 billion and a high estimate of 4.57 billion in 2023. They're expecting them to make a 4.5 billion, anywhere between 4 to 4.5 billion in 2023. I'm not even looking at 2023. I'm not even looking at 2024. I'm saying that they're going to make $5 billion in 2025. You know how undervalued this is? If they're going to make almost $5 billion in 2023, I'm saying they're going to make $5 billion in 2025, which is completely wrong. They're most likely going to make $11 billion by 2025. Okay. So I'm just going to be conservative, and I'm just going to put 5 billion, which then grows them at 51%. Now let's see here. Perfect. So let me look at the questions here really quickly. I believe that even Clove will have a SaaS and it will disrupt the industry mainly because it allows patient to benefit from the exactly, absolutely, and it gives the SaaS data to individuals that are in rural communities that don't have access to this. Collected from them allows doctors to benefit. Absolutely, absolutely. So based off of these, and this is me going very conservative, extremely conservative, guys. We're looking at anywhere between $31 to $44 for the base and $67 for the bull. Okay. Now, I personally think based off of these growth rates, I think that they're going to make $11 billion by 2025. It just, that's what I think is going to happen, which then pushes them out to 69%, which is fair considering they're growing at 160% now. That is anywhere between $89 to $198 with a base value of $128, which was our prior bull before, right? So now let's do some calculation. If we're expecting them to grow, let's say 55% year over year, then that means if they're going to make $3 billion by 2022, and if they're going to grow 55% of that, then they're going to be adding another $1.6 billion in 2023, which then hovers them around 4.6 billion, which is exactly where analysts are projecting. And these are like their high estimates. And from what I'm looking at, Clover always underestimates, which I really enjoy that about a company when they do that. Now, if we do, then this is 2023. If we go ahead and multiply another 55%, you would get 2.5 billion added on to the 4.6 billion dollars, giving them 7.2 billion in 2024. Now you do another 55%, and they're probably going to grow even more since they're taking market share. Then we do 7,207 plus 3,964. We're hitting, just like I said, $11 billion. So based off of these, if Clover ends up doing around 11 billion, we're looking at a company anywhere between $89 to $198. But now that's just basically based off of the calculations that we have right now. Now, sometimes if this SaaS comes into fruition, if this VL long-term SaaS option opens the door for Clover, what is the average revenue multiple for a SaaS company? Okay. The average is anywhere but trading at, so here it is. SaaS continues to be strong. Of 120 SaaS companies we follow, the average public SaaS business is trading 20 times revenue, while the median is 13. The gap between the average and the median is wider, and so it's 7.1. So a better way to analyze this, if you were to look at this, you can take the high of 12 and you can take the bottom of 1, which is 13 divided by 2 is around what? What's 13 divided by 2? Help me out. 6.5. Let's call it 5. Let's undervalue it at 5. So by 2025, if they have $11 billion by 2025, what you can do is you can say 11 multiplied by 5 times the revenue, meaning that Clover would be a $55 billion company, okay? And this is taking only a revenue multiple of 5. And we've known that Clover's history has been at a revenue multiple of 12. And we know that a SaaS can go up to 20x. So I'm only doing 5x. And if you do these types of calculations here, what you can find is you'll have a $55 billion company Currently, it's worth $1.27 billion. Now, just to make it simple, let's call it, and I know I'm undervaluing it again, let's call $2 $1 billion, okay? So all you got to do is just take this number, multiply it by 2. You're looking at $110 stock by 2025, and that's just with a 5x revenue multiple. Now, if you want to be a little bit more ambitious and say the ceiling of a SaaS, which we know, CrowdStrike is its SaaS is 20 with this bear market, 26x, and it goes all the way up to 60x. So we don't know. Like Palantir went up to 40x. Now it's at 13x, right? So this could go high, but just let's even be conservative with this 20x revenue multiple. If we get 20x, we're looking at a $220 billion business. And again, if you multiply it by 2, you would get $440 per share. Now, I'm not saying we'll calculate it at a 20x. What I believe is it's going to be a 5x revenue multiple. And I think it's going to be over $100 stock, 110. Now, if you look at the data here, you can see from our intrinsic value calculation, we're hitting this type of analysis, anywhere between 89 to 198. So I'm very conservative. My price target for the short term is 40. Again, I need to see profitability. And once this happens, I'm telling you guys, we're sitting on a gold mine here, and you can see why the institutions are loading up the boat. No big institutions that I've seen have sold. In fact, in our private Discord channel, which you can get 3-day free trial, we've been featured on Bloomberg, MarketWatch, Benzinga, Yahoo Finance. The results speak for themselves. If you go in here and if you look up institutional ownership, I would have to, let's go up to stock research here, look at the command. Insider trading, seasonality, revenue estimates. I'm a little tired. Let me look up my own commands here. I'm having a brain fart. So if you look up the institutional ownership from my memory, it's approximately 36% increase in institutional ownership since the 6-month strike. And we'll look at this right now by going right here. Yes, so 36%, and this is directly from our Discord, right? 36% ownership in the past 6 months. Institutions own 130 million shares, and there are about 170 million shares right now. So if you were to do the math, 130 divided by 470, institutions own around 27% of the company, okay? So there's a lot of good that is coming, and we're going to look at the support and resistance lines on Clover here. So, so like I said, this thing can go up to $400 for 20x. Now let's go backtrack and let's go back to 2022. And let's go to $3 billion because that's how much they're going to make. And this is directly from their system. As you can see, directly from their system here, we're going $170 as the bear to $384. This company is growing rapidly. They are taking market share. Okay, so if they end up growing like a 20x multiple SaaS, then we're going to see 440 based off of these simple calculations, but from our intrinsic value, it's around that. And just very simple, just to put this here, 11 times 20x, we're looking at a $220 billion company. Now, if you look up United Healthcare stock, United Healthcare is, and don't act like, oh, that's a lot, $200 billion company. Look at the market cap for United Healthcare. They're sitting at $469 billion. Okay, this is not out of the ordinary, guys. Okay, if this company continues to disrupt and take market share and grow with the ever so growing senior population of approximately 10,000 citizens in the United States, then you best believe that Clover is going to go, it's going to go supersonic, okay? Now, again, this is the best case scenario. I personally like to be conservative. So I'm giving them $5 billion. Please don't look at these numbers. I have to switch it to 2025. By 2025. And my price target so far is around $40 to $50. Okay? That's my price target. I like to be very conservative. I will adjust the price target as the stock ascends to its intrinsic value, and we will slowly adjust it ever so often. Now, you might be asking, what adjust what, Al? We're at $2 dollars. You have to understand, we're in a bear market right now. There's a lot going on. Understand that all stocks are down, okay? So let's go. Don't do that. Don't give me hope. No, I'm telling you, look at the numbers. I'm doing it. I mean, you see this? You see these numbers here? I'm doing all this. I'm getting the numbers from here, right? So now very quickly, now let's go ahead and look up the Al DCF CLOV. Now this is more for short term. This is, if you were to look, this is our intrinsic value calculation. This does, again, it's uploaded into our Discord. It's a leading edge market analysis utilizing machine learning algorithms for people that don't know what the hell this is. If you want to look up our calculations, think of this as a satellite camera looking down at your home. This thing goes so far out and is able to really calculate far out. Now this is calculates more for the short term. It calculates using beta, which includes how volatile the market is, and it's able to take all of that data and give you a price target. So right now we're looking at we're currently at 269, and then the DCF is $3.32. Okay, and it's going to hit that. You know, and you know it will, right? So. And that's going to be, who knows, I think on Monday. So the question now for my day traders, swing traders, omni traders, long-term traders, I have two different accounts. I have multiple accounts, but I have two different accounts, one for short-term, one for long-term. My short-term account, I definitely bought some Clove at the $2.60-ish. In fact, I told my Discord, I'm like, this is where you make the money. Go for it, right? And just very quickly, let me show you. We just spoke today regarding this here. So this, and we're going to be including this in the Mastering Stock Market course for my, you didn't see the video. This will be on the Think or Swim. It'll be pre-planted. You type it in and it'll give you a pre-planned Fibonacci. Now it's just like the Discord where it gives you the pre-planned Fibonacci, but this you can play with it and actually be more interactive to it. We're going to be porting this through the brain machine, but just, be patient with me. But as you can see here, you can see that the low here at $2.60, and it went all the way to the high of the Fibonacci at $2.97. You can use that to help you trade, right? Likewise, another thing that just very quickly, you can see these downward trend lines happen at the end of Friday because of the Feds and what they said of the 75 basis point hikes. Right after they said that's off of the table. Come on now. You can see there was an increase right at the end of Friday, a trend line going up, and this will be pre-planted. You can look at any stock you want, like Netflix is just going down, right? You can see there was a reversal. You can see that the RSI is jumping off, and the MACD went ahead and hit a signal. Okay, these are all good, and that's what we have there. And we're going to go questions, and then we're going to go ahead and do the support and resistance lines to show you where could the stock go. Honestly, I think it's going to head up to $3.80 and probably fall back down if there's no SaaS news. If there is SaaS news, I honestly, I don't know what would happen to the price. I don't know. Yeah. So let's see. There's an article showing quite a few institutions buying 100 to 500K shares since last quarter. Wow. I need to go into that. I look into it again. It's been a while. I believe your math, your calculation algo is correct, but you input data incorrect. If you would have used the current valid data revenue of $5 billion 2025 is a min base should be $63. In other words, your conservative projection 38 is overly conservative, but I'll take it any day. Exactly. You saw it. Irish, or no, we're not Irish. I don't even know how to say your name. I don't know. You're going to have to teach me. My apologies. Exactly. He hit it right on the point, because think about it. I'm saying they're going to make $5 billion in 2025. They're about to make $4.5 billion in 2023, anywhere between $4 to $4.5 billion in 2023. Then I'm telling them they're about to make close to $5 billion in a year from now. I'm saying it's going to take them 3 years to make $5 billion. You see how undervalued this is? I'm undervaluing the crap out of this company. And even if every time, again, because I'm conservative, you know what I mean? I every time I keep doing that, I keep stumbling at a stock price higher than $20 freaking dollars. Okay, so this is obviously undervalued as hell. But let's continue. So no SEC filing since March, re-ownership change. Any concerns? Honestly, I think institutions have bellied up and they've eaten as much as they can. If you go specifically to our hedge fund information in our private Discord channel, you can look up the smart money, dumb money confidence, and you can see that smart money has been loading up. And right now, they're slowly starting to trickle down. They've loaded up enough, I think. And right now, it's all about that growth. Now, if, for example, the SaaS does come into fruition, it does speed up the process that the price would go to this intrinsic value, meaning that they're probably going to go ahead and double down more. So you're saying Clove will go crazy. If they follow through their plan and they release their number 4, just like what they said about direct contracting, if they release this long-term, and this is directly from the investor relationship, this is directly from Clover. If they tap into their SaaS earlier than what I was expecting them tapping into SaaS in 2025. That's honestly, I mean, wow. I mean, if they can tap into SaaS now, and Chamath said it, he was like, this company tapped in earlier on accident. He said on accident, by mistake. If you look at the All In podcast, and I don't know, like I'm not too sure. I just don't know if it's them or not. But if it is, holy freaking damn! I mean, this is like this was fast. So we'll see right now what's going to happen. But regardless, what this gentleman was saying, whom I cannot pronounce, I can't read that line. My apologies. Again, it looks like a pi right there, 3.14 syllable there. I'm being overly conservative here. So all those analysts that you see, if you don't believe me, remember when Elon Musk was supposed to, I'm going to buy Twitter, $54. Goldman Sachs said that's too cheap. But then if you pull up Goldman Sachs's analysis on Twitter before Elon Musk came into the picture, they said Twitter was a sell at $30. Listen, they say these things to not make them sell, but to make retail sell. In fact, if you look up Twitter, and if you go to our price target page, which is here, and if you look up, I posted that Twitter in February 10. I said February 10, Twitter is worth $54. Would you look at that, right? And then all of a sudden, Elon Musk goes ahead and purchases it for $54, and 54. Then he had to add the 20 cents, but that's exactly what And then all this energy. So the energy stocks that went up recently 73% here, which we called out when it was trading at $4. Now, listen, our calculations work. I try to be overly conservative, and just like for this energy stock, I said here it's recently became profitable this year, and it usually takes time for Wall Street to catch up. Now, this is an oil stock. Usually for tech stocks, Wall Street is on top of it. As soon as it becomes profitable or before that, they jump in. In fact, but with Tesla, they delayed it. They wanted retail to sell. Retail's getting smarter now, more so than back in 2008 and all these other things that happened with the whole recession and everything. There's a lot of investors out there that have just left the market. They've lost $200,000-$300,000, and they just kind of stepped out of the stock market and nowhere to be returned. And that's what they're trying to do with these new investors. So that's the point of us, what we're trying to do here. We're trying to democratize financial information. And I'm very thankful that to Bloomberg, to the NASDAQ, and everyone that has sponsored us and featured our program and our software on the platform. Again, if you guys want to sign up, it's a 3-day free trial. If you want the Mastering Stock Market course to get access to our intrinsic value calculation, it's also at alstocktrades.com. Again, we just want to help. And again, this calculation is overly undervalued. So, so that's pretty much with that. So now we're going to go specifically, really quickly, and look at the support and resistance lines here. And for Clover, let's go to the right channel. So very quickly, if the stock was to go up, I'm just pulling up support. So for people that don't know what this is, this basically graphs you the support and resistance lines using artificial intelligent technology, all included in the 3-day free trial at All Stock Alerts. And you can look up we don't throttle anyone. We can look up any stock you want. You can be up here until you're blue in the face, right? So very quickly, there is a resistance, hard stop resistance level at $3.82. Now, the stock could go up really quickly. We're talking maybe a 20, 30% increase. Now, if you think that's too high, I mind you to take a look at BHG, because they went up a lot from $1.64 up to here. They went up like 25, 30%. And I don't think their earnings is going to be a lot stronger than Clover's. So understand that this could be a potential quick day trade options, whatever you guys like to do. It'll be very great. And for people that are in the mastering and in the All Stock Alerts, I recommend you guys using this during the time so you know when to get in and get out, right? I personally I doubled down on last week when it hit $2.60. Then it rose up, and I was like, I just don't have time to go back and forth. Then it ended up going down on Friday, but I'm still up on that position on the short term, and I'm waiting for it to fly up. I think for Monday, it's just a nice easy percent return really quickly here. So take advantage of that. Look at the $3.74 resistant line, because it could go up and touch that. That's been rejected 3 times here, 1, 2, and 3. So make sure to take a look at that and look at your MACD, RSI, simple moving average, exponential moving average, price actions, and trend lines to help you facilitate your in and out for all the short-term traders out there. Now, for the long term, if you don't want to worry about it, remember, long term, it's looking pretty sexy too. And I believe that is all I have to say. I will leave you with a Twitter and Wall Street Bets analysis to see what are stocks that are people chatting about right now on the social media, to see maybe if Clove is on here. And this is all part of our Discord. So you can see, I don't see anything here. I do see Palantir, but I don't see so much Clove. So I don't see Clove. But I think once people see how much it grows, then we're going to get the bandwagon to come on in. So, all right. So, it's a privilege and honor. Someone told me to make a Clover video before the earnings, so I hope I set things in perspective. I know the rumor, SaaS, but I'm telling you, I don't like to go off of hype. All I'm saying is they've talked about SaaS before. They've mentioned it. And then all of a sudden you have the all-in podcast and everything. It's just, it could be them. And if it's not, great. We can continue loading the boat. But in the future, this will come. This will come. All right. So that's all I have for you guys. It was a privilege and honor. I recorded a little differently today. I wanted to change the background for you. We are recreating the YouTube studio, where it's going to be amazing. I'm gonna have a standing desk, so I can talk to you guys a little bit more. It'll be a little bit more smoother for me. And I think that's all I have to say. Give me 10 seconds to process really quickly. Yes. 2 things. Make sure you sign up. It'll help the channel as well. 5 free stocks If you only open up a Moomoo account, you would get one stock. If you deposit $100 or more, you'd get another one. So that's 2 free stocks. And if you deposit $2,000, you would get 3 more stocks, giving you 5 free stocks. Take advantage of this. It's free money. And the beautiful part about Moomoo is, look at this. They give you access to free level 2 data, free level 2, right? And short selling data. So it's this extra resources that you have as a trader under your belt, just in case if Webull, crashes, or Thinkorswim crashes, or, whatever trading platform you use crashes, you will have another one and you'll get 5 free stocks. It's a great platform. I enjoy it. And I hope you do too. And I know you will. So there it is. And there's the link down there. And that's with that. One more with the recession talk. We have a institutional access to hedge fund information. And in terms of the composite recession model, I don't see a recession in the short term. However, we do have a risk warning model of a risk off. And we're still so long story short right now, just to explain, because this is like, you might be looking at this, what the hell am I looking at? We're still bullish. This may be a correction and not a recession. And I think we might rally. And I think tech stocks will begin to rally at the end of the year. I personally think a recession will happen in 2023 and 2024. That's what I think. CMBS. What is what is CMBS? Commercial mortgage-backed securities. I'll take a look at that. I'll take a look at it. It's almost like the mortgage back for the 2008 financial crisis. I'll take a look at it. But I'll definitely take a look. But yes, so commercial mortgage-backed securities will cause the recession. They have leveraged a lot, that's for sure. That'll be definitely scary. Great opportunity though. I personally think real estate has become very expensive. Very quickly, just kind of switching gears to real estate here. The average home is what the average person making was $57,000 a year. What, 6% interest? But we're looking at a medium home of $500,000. What is that? $2,500 to $3,000 a month. People can't afford that. People can't afford that, right? So I do think prices on real estate need to come down. It's just people have become so greedy that the new generation, if you're not born into wealth, you will never have an opportunity, or it'll be harder for you to have an opportunity to feel what it's like to own your own home, right? Which is why we created our stock alerts, and we only charge $10 a month for the annual. Okay, we try to do it really affordable to help people. In fact, someone just commented the other day and told me, it made me smile, I wish I had this in 2019. I would have been a millionaire already. So that's why we created it. And we hope that we're able to help a lot of people. And I'm very proud that I have the support of these major news outlets in supporting our mission and democratizing financial information. So it's a privilege and honor, guys. God bless you. And yeah, that's all I have to say. Bye-bye.